the Fed's open market committee met. Jerome Powell gave a press conference off of that. I've kind of on this channel given a lot of my thoughts on what he said, so I won't over repeat myself here. But what did you take away from what Powell had to say? Well, I should also say the Fed, as expected, did hike by 25 basis points.
So let's back up to last week as we talked about this, and I said I expect the Fed to hike by 25 basis points and then give a nod to the banking issue, which is exactly what they did. They hiked 25 basis points and gave a nod towards the banking situation, saying, hey, we're going to make sure, do whatever we need to do to ensure that the banking, it remains sound and stable. One of the most interesting comments that he made, which didn't get a lot of press time, but he said that, they're going to take some time here and review what happened with the banks, and try to figure out what happened, because he specifically said this just cropped up over the weekend and we weren't really aware, which kind of scares the crap out of me a little bit, because it's twofold, two things. One, you caused the problem by hiking interest rates and sucking reserves out of the bank. Two is that you are the ones that are always stress testing these banks and saying, oh, everything's fine, everything's dandy, these banks can withstand a surge in unemployment and higher interest rates, and they'll be just fine. And yet every time something happens, we got to bail them all out again. So, it kind of scares me a bit that Jerome Powell actually said, well, yeah, we're going to study this event and see what happens. Like he doesn't know. So, that kind of bothered me a bit. But the other side of this was, and if you notice during his press conference, he made a very assertive effort to repeat multiple times that they're going to keep hiking interest rates to combat inflation. He repeatedly said inflation is too high. We want to get it down to 2%. We're not anywhere close to that. We're going to have to maintain our inflation stance for right now. Markets really kind of shrugged all that off.
Yeah. Can I just push back on that for 1 second?
Sure.
So I did hear him say, look, getting inflation to 2% is still priority 1, 2, and 3. Totally agree with you on that. Okay. What I heard him say was, we hiked this time. I'm not committing to another rate hike yet, that we're going to wait and see, at the next meeting, what everything looks like on the ground. But he raised this issue of, because of the concerns around the banking system, that banks are now going to be tightening lending standards from here. And he says that actually substitutes for additional rate hikes. I can't entirely quantify it, but it's additional tightening on top of the 25 basis points that we're doing today. So we're going to kind of wait and monitor, and then we'll decide then. So that's what I heard. Did you hear the same?
Yeah, no, absolutely. And in fact, I'm actually writing about that in this weekend's newsletter, because, whenever we've had whenever we've had bank lending standards tighten as rapidly as they have as of late, you have always had a recession, and they are in a very kind of interesting manner, a de facto rate hike on the economy, because you're extracting capital from the economy by making lending standards a lot tighter. So yeah, absolutely. My point was, though, is that, he didn't let up on that inflation fight. He said, yes, we're watching bank lending standards, which are going to act as rate hikes, which is going to slow economic growth, which is going to lower the rate of inflation. So they hike. And the interesting thing is that what's happening with bank lending standards is going to act as additional rate hikes. And again, I've got a chart in this weekend's newsletter in particular showing that. And we've had a very dramatic spike. Those lending standards are nearly as tight as they were going into 2008.
Yeah, and the reason why I just want to underscore this is it's twofold. One is that we may be closer to the pause than Powell had been thinking up till now, because he now realizes, oh, I've got the banking industry tightening now to help me here, right? We don't know if that's the case or not yet. We still may get a rate hike, at the next meeting from here. We don't know, but Powell has basically kind of stopped the forward guidance of, yes, I'm doing X rate hikes from here, and now saying I'm going to monitor because of all this stuff.
And real quick, the market is now pricing in almost 150 basis points of rate cuts by the end of the year. So, You know,
I
there's
have that here in my notes to talk about with you.
yeah, there's a huge detachment between what the market thinks and what the Fed says. So we'll see.
Well, and on that though, so Powell was directly asked about that. They said, "Hey, look, the market is pricing a bunch of rate cuts, starting pretty soon, like summer." And Powell just said, "Hey, it's not my plan."
Yeah.
I think his words were, "That's not my default." He's always going to leave the door open for something to happen.
Sure.
But he basically just said, "Yeah, it may be what the market thinks, but that's not what I'm planning to do here."
Absolutely.
Now, that gap is really big. And what's interesting about it is it's not that far away from when the two start really diverging. So we don't have all that long to wait, but it's going to be interesting to see, does the market's expectations slam into the disappointment of higher for longer? Or does something happen, banking system wise or other, that forces Powell to start cutting? And again, as you and I have talked about, if that's indeed the case, probably not going to be for bullish reasons.
Yeah, well, that's a very interesting case about that, because this weekend's newsletter is specifically talking about the fact that we now have buy signals across the board for the market, which, you're going, wait a second, we're having bank crises and markets are triggering buy signals. And yeah, that's the case. On I think the first week of February, we wrote an article talking about the correction had begun for the markets. And we said, hey, we just registered sell signals across the market. We need to raise cash levels. You need to reduce equity risk. We've likely started a correction. Well, that turned out to be exactly the case. And the market, corrected down to below the 200-day moving average, retested December lows. And interestingly enough, right in the midst of all this, banking problem, the markets had the first 2 days of this past week, the markets rallied fairly strongly going into the FOMC meeting. And that triggered those buy signals that, normally suggest that we're going to have higher stock prices over the course of the next few weeks or next couple of months. And, I find that a very interesting dichotomy to all the headline risk we have in the markets right now, particularly, just from the media side of it and commentators, et cetera. And it's interesting, the action of the market this week has actually been fairly bullish. We continued to retest support levels. Even on Friday, we woke up to Deutsche Bank may be the next bank to fail. Markets opened almost 1% lower and then rallied back into positive territory by late afternoon. So, that's very, kind of bullish action in terms of buyers stepping into the market to buy weakness. It's just been a very interesting dichotomy over the last week, based between what headlines are saying and what the market's actually doing.